Hey everyone, after the massive success of Zomato, we have another IPO coming from the same segment. It's the IPO of Swiggy. The most interesting part of this IPO is, while Zomato today commands a market cap of nearly around 2.2 lakh crore, Swiggy is asking for a market cap of around 87,300 crore. That's 60% below Zomato market. Whereas if you look at the top line of both companies, they are almost at par, with Zomato FY24 sales of 12,100 crore and Swiggy FY24 sales of 11,200 crore. Now a lot of people have missed the rally in Zomato. So the question is, can Swiggy help in creating wealth by riding the fast growing quick commerce wave in India? So in today's video, we'll review Swiggy business model, future growth prospect, IPO details, and we'll do a comparison of Zomato versus Swiggy across KPIs to get a fair idea of Swiggy valuation. Finally, we'll look at the key risk and growth thesis. Hopefully this video would give you a good clarity on whether it is worth investing in Swiggy or not. Alright, let's get started. So Swiggy started its business as food delivery company in 2014 where you can order food online. And then in 2020 it launched a quick commerce service to deliver grocery and household item under the name Instamart. Apart from these two businesses, Swiggy also offers restaurant reservation service under the name Dineout. It actually acquired Dineout in 2022 for $120 million. Then fourth vertical of the company is event booking under the name Step In Out. Fifth vertical is product pickup drop service under the name Genie. And sixth vertical is hyper local commerce activity under the name Swiggy Minis, which is a SaaS-based platform where small business owners can take their business online by creating websites and managing online business. Apart from this, Swiggy offers various other value propositions like membership program under Swiggy One that provide discounts and offers, then digital wallet under Swiggy Money, Swiggy UPI, Swiggy SDFC credit card. It also offers various service to restaurant partner, merchant partner that sell grocery and household item that include data analytics, fulfillment service to streamline the supply chain as well as last mile delivery. So overall, Swiggy business is very similar to that of Zomato. Now let us try to understand the growth prospect for Swiggy. As far as future growth prospects are concerned, it all started with food delivery business that gained a lot of traction in metro cities due to the busier lifestyle and heavy traffic. But this food delivery trend was still not very prominent in smaller towns. Hence the TAM, that is total addressable market for players like Zomato and Swiggy, was restricted. But the TAM exploded with the rise of quick commerce business that included delivery of grocery and other household items. One of the biggest reasons behind explosive growth of quick commerce is not just convenience but quick delivery within 10 to 20 minutes. This is so revolutionary that even if the store is next door or a few minute walking distance, people like to order it from Swiggy, Instamart or Zomato, and there is third platform which is Zepto. People don't even want to step out of their home to even buy a packet of milk or bread. The problem is it's addictive. They first attract you with high discount and that makes you habitual to home delivery within few minutes. And once you get hooked to the comfort of home delivery, you don't want to come out of your comfort zone. And this trend is not just limited to metro city. The market of quick commerce is entire India geography, including tier 2, 3 and 4 cities and even rural part of the country, because you can order almost anything and everything with these quick commerce platform. And that is the biggest reason why everyone is going gung-ho for Zomato and Swiggy. And I also believe that quick commerce is undoubtedly one of the fastest growing industry in India because of 145 crore population. And consumption is a multi-decade growth story in India. Of course, the rise of smartphones and high-speed internet has played the most crucial role in rise of quick commerce platform in India, where consumption patterns are shifting from offline to online delivery. Today, these platforms have just scratched the surface. As per Red Sea report, quick commerce market in 2018 was almost negligible. In 2023, it is now 224 billion rupee, that is around 22,400 crore. And this market is expected to grow more than 10 times between 23 to 28. Wow, 10 times growth for the market is extraordinary. In spite of that, its penetration as percentage of retail business would be just 2 to 3%. Now that we are discussing the growth of quick commerce, do you know how is it possible for Blinkit, Swiggy to deliver product within 10 to 20 minutes? It's because of dark stores. So dark stores are basically small fulfillment centers that caters to only online orders. The benefit of dark store is that it has a limited fixed cost as you don't have to open a store in a prime area of the city. These dark stores can be opened even in the deepest corner of the city. So how it works is, once the order is placed, it is displayed on the screen on dark stores. Immediately, the employee packed the order in 1 to 10 minutes, and then delivery partner reached the dark store within few minutes, and order is delivered within 10 to 20 minutes. Currently, the revenue per square feet for dark store is 2 to 2.5 times higher than traditional retail stores and has the potential to become 3 to 5 times higher in the near future as the dark store become mature in scale. Going forward, Swiggy is focused on growing these dark store count to expand its reach in various parts of the country. So growth of dark stores would play a significant role in Swiggy quick commerce business growth. In fact, this growth is clearly visible in the numbers also. So this slide shows the complete performance of Swiggy over the last few years. On top, you can see the consolidated performance across its vertical. Here you can see B2C GOV, which is nothing but business to consumer business, and GOV is gross order value. It's nothing but the overall value of the orders Swiggy has received over the years. So in 2022, company received a GOV of 20,122 crore. In 23, it got increased to 27,740 crore. In 24, it got increased to 34,969 crore. So there is a very good growth in the GOV for Swiggy over the last couple of years. And in June 30, which is the Q1 of FY25, it's already at 10,189 crore. Next, if you look at the gross revenue, it was 6,860 crore in 22. That got increased to 12,320 crore. So the gross revenue has already doubled in just 2 years. And in Q1 of FY25, it is already clocking nearly 3,500 crore of gross revenue. Next, if you look at the adjusted EBITDA, it was in loss of 3,200 crore in 22, then 3,900 crore. This loss has reduced to 1,800 crore in 24, and in Q1 of 25, it has further reduced to 347 crore. So over the years, this adjusted EBITDA loss has reduced significantly and eventually it would become profitable. Next, if you look at the average monthly transaction user, it was 1.02 crore in 22, that got increased to 1.27, then 1.43, and now it is 1.6 crore. Next is average monthly transaction delivery partner. So it was nearly 2.4 lakh in 22, that got increased to 3.2 and then 3.9 lakh, and today it is 4.57 lakh delivery partners. Apart from this, there are a few other data points. Next, we have to understand what is the breakup of their key business area, and one of the business area is obviously their food delivery. Now, interestingly, if you look at the gross order value, in 22, it was 18,478 crore. So out of 20,122 crore of GOV, nearly 18,500 crore was from food delivery. So more than 90% business was coming from food delivery. And in 24, although it has grown from 18,000 to 24,717 crore, this contribution of food delivery has reduced to nearly 70% of overall Swiggy business. So food delivery has grown over the years, but the contribution has reduced mainly because quick commerce has grown exponentially. That has contributed significantly in the Swiggy business. Next, if you look at gross revenue, it was 4,400 crore. That got doubled, nearly doubled to 8,061 crore. Contribution margin was 2.94%, which is as a percentage of GOV. That has increased to 6.5% in 24. Adjusted EBITDA, it was in losses for a couple of years, and this Q1 of FY25, it is showing a 57 crore of adjusted EBITDA. Monthly transaction user was 0.98 crore, it is now 1.4 crore, and transaction restaurant partners 1.29, that has increased to 2.23. Moving on, Swiggy also has this out-of-home consumption vertical, that is a GOV of 2,183 crore and 24, revenue of 157 crore, contribution margin of 2.45%. Next, very important vertical within Swiggy is the quick commerce. And if you look at the growth, the GOV of quick commerce in 22 was 1,643 crore. That has increased to 5,100 crore and then in 24 increased to 8,000 crore. So look at the exponential growth from 1,643 to 8,068 in 2 years. And in Q1 of FY25, it's already clocking a GOV of 2,724. Next, gross revenue, it was 124 crore. That has increased to 547 crore. And in Q1 of FY25, it is already clocking gross revenue of 403 crore. Then contribution margin, it was minus 32%, that got reduced to minus 23 and now it is minus 3%. Adjusted EBITDA, it was minus 883 crore, minus 2000, minus 1300 and now it is minus 317 crore. So going forward, this quick commerce division would play a significant role in the growth of Swiggy. Apart from this, there are a few more verticals like supply chain distribution and platform innovation. So overall, the numbers clearly shows that Swiggy is growing at a very fast rate, and within that, the quick commerce division is growing at an exponential rate. In short, the growth potential in Swiggy is exponential. Now let us look at Swiggy's IPO detail. So Swiggy IPO date is between 6 to 8 November. Price band is between 371 to 390 rupee. Lot size is 38 shares. Company is raising around 11,327 crore in this IPO. Out of this, 4,499 crore is fresh issue of equity, and remaining 6,828 crore is offer for sale. Out of fresh issue, company would use 982 crore for expansion of dark store network for quick commerce. And remaining fund would be utilized for investment in technology, building cloud infra, marketing, branding, funding inorganic growth, and so on. At an upper price band, Swiggy market cap would be around 87,300 crore. Now, as far as valuations are concerned, since company is in loss at the moment, we can't have PE ratio. So the biggest question is, how do you know if it is worth investing in Swiggy or not? What is the fair valuation you should pay to invest in Swiggy? For that, let's compare it with Zomato. So this slide shows the comparative analysis of Swiggy versus Zomato. If you look at FY24 data, Swiggy revenue was 11,247 crore, whereas Zomato clocked revenue of 12,114 crore. So there's a neck-to-neck competition. But Swiggy EBITDA was minus 2,208 crore, whereas Zomato EBITDA has become positive to 42 crore in FY24. EBITDA percentage of Zomato is 0.3. Profit, again very important parameter, Swiggy was at loss of 2,350 crore in FY24, whereas Zomato has become profitable at 351 crore. Then Swiggy was sitting on cash of 5,446 crore, whereas Zomato was sitting on cash of 12,241 crore in FY24. Next, if you look at the vertical wise performance, within food delivery business, gross order value of Swiggy is 24,700 crore, Zomato is 32,200 crore, adjusted EBITDA is minus 47 crore, whereas Zomato is 912 crore. Then monthly transaction user, you can see Swiggy is 12.73 million, whereas Zomato is 19 million. Contribution margin of Swiggy is 5.7%, Zomato is 6.9%. So overall, at revenue and gross order value, while Swiggy and Zomato has neck-to-neck competition, if you look at the profitability and the EBITDA, Zomato has already become profitable, whereas Swiggy is not yet profitable, right? And if you look at the quick commerce business, which is going to be very important in deciding the growth of both the companies, in FY24, Instamart gross order value was 8,068 crore, whereas Blinkit GOV was 12,469 crore. Active dark stores of Swiggy is 523, Zomato Blinkit is 526. Contribution margin was minus 6% versus Zomato is 2%. Right, so I hope you got a fair idea of comparison across key parameters of Swiggy versus Zomato. Based on these parameters, let us figure out the valuation. So if you look at Zomato, currently it is trading at a market cap of 2.14 lakh crore. And if you look at price to sale for FY24 number, it's 17.7. So this is, please note, it is FY24 price to sale. Next, obviously, if Swiggy is lagging behind Zomato in terms of profitability, slightly it has got lower market cap as compared to Zomato, so it will command a discount as compared to Zomato. But the question is, what is the discount you should give to Swiggy as compared to Zomato? So I have taken three cases. First case is I have considered a 25% discount of Swiggy valuation as compared to Zomato, and that would fetch a market cap of 1.6 lakh crore and price to sale would be 14.3. If you say no, 25 is too less discount, if you consider 30% discount to Zomato, your Swiggy market cap should be nearly 1.5 lakh crore at a price to sale of 13.3. If you consider 35% discount, even steeper discount, then market cap should be 1.39 lakh crore at price to sale of 12.4. As compared to that, if you look at Swiggy IPO valuation, it is getting listed at a market cap of 87,298 crore and price to sale of 7.8. So at current valuation, Swiggy is getting listed at 60% discount to its competitor, and considering all the parameter, I think that at current valuation, this looks like a good deal. So based on the analysis, both Zomato and Swiggy have neck-to-neck competition. Sure, Swiggy is not yet profitable, but I'm sure it's a matter of time. Eventually, Swiggy would become profitable as well. Considering all these factors, when I got to know that Swiggy is getting listed at 60% discount, I thought it would command a very high grey market premium, and would give a good listing gain to get a fair valuation as compared to Zomato. But at the moment, Swiggy grey market premium is in single digit. And I'm really surprised to see market reaction. To get a fair idea of company's valuation during its IPO, I also closely track company's anchor book before the IPO. And Swiggy has received a stellar response from institutional investors that have invested more than 5,000 crore in the IPO, and it include 8 out of top 10 mutual funds of India, including SBI Mutual Fund, ICICI Prudential Mutual Fund, Kotak, Mirai, Nippon, and so on. It has also received a lot of interest from top domestic insurance companies such as ICICI Prudential, SDFC, SBI Life. Anchor investors also include marquee foreign institutions including Nomura, Government Pension Fund Global, New World Fund, Fidelity, BlackRock, and so on. Considering all these factors at market cap of 87,300 crore, I think that the risk rewards are looking favorable for Swiggy. Now let us look at the key risk in growth thesis. While there's no doubt that there is immense growth potential in quick commerce industry, one of the biggest risks in my opinion is competition risk. Considering the growth potential in the industry, all top guns are planning to launch their quick commerce service. For instance, Amazon is preparing to launch its quick commerce offering in India and targeting first quarter of 2025. Flipkart has already rolled out its quick commerce service in Bangalore. Big Basket, which is part of Tata Group, is completely pivoting to the quick commerce model. So going forward, incumbents like Swiggy, Instamart, Zomato, Blinkit, and Zepto would face stiff competition. And then it would be interesting to see the evolution of quick commerce space. Please note that Swiggy is still not profitable, so growing competition can further delay its path to profitability. Although considering the market size, there is enough scope for multiple players, but risk is, can growing competition slow down the growth of incumbent players? Or can they impact the profitability of incumbent players? These are the questions for which we will have to wait and watch. In any case, this is a very exciting segment to keep a close eye. Overall, Swiggy is certainly a fast-growing company with strong share of Indians' online food delivery market as well as fast-growing quick commerce segment. There is no doubt that future potential is also looking very promising. Having said this, one of the key risks is rising competition in the quick commerce sector that we need to track closely. At the moment, Swiggy getting listed at a market cap of around 87,300 crore, which is nearly a 60% discount to Zomato. That looks good to me. Although the grey market suggests not much listing gain, but that can create good opportunity for long-term investors. Based on these factors, I have a positive view on this IPO for medium to long-term horizon. Hence, if you have a high risk appetite and a long-term viewpoint, you may consider allocating some money in the IPO. So this is it for this video. Now tell me in the comments, what do you think about Swiggy for medium to long term? Is it worth investing the money? If you find this analysis useful, do share it within your friend circle. I'll see you next video. Till then, take care.